To calculate the federal income tax payable, we first must calculate and determine if this company, New England Arts, has a net income or a net loss. If you remember, our formula to calculate a net income is revenue minus expenses will give us net income or loss. Again, if they have larger revenues and expenses, they'll have that net income. So if you take a look at this adjusted trial balance sheet, the easiest way to do it is you take a line at income summary and you take it and you draw it. Everything above income summary are going to be items that are going to go on our balance sheet. So we're not going to need them for this calculation. Everything below it is going to go on our income statement, and we're going to need them. So the first thing we do is we're going to take column A, which is right here. We're going to add this up, and we're going to get column A. We're then going to add up this with the exception of the federal income tax expense, and that's going to get us column B. A minus B will give us our net income. So I've now calculated our net income. I'm going to label our net income to simplify this process as letter C. So I go over here to my bracket, and when I go over to my bracket, I am going to ultimately calculate my net income. We've already kind of done this, but this bracket allows you to do it. So the total of the income statement credit column is going to be letter A, as we kind of pointed out here. If you notice here, that is going to go right up in there. And then the total less the total of the income statement debit column, which again is going to be right here going from there. Okay? That will get us C, which is our net income. Now, for all intents and purposes, I am going to use $64,000 just as an arbitrary number for this example. So now, let's figure out our federal income tax. We know that this $64,000 is our net income before income taxes. So net income before federal income tax is C, but I'm going to use $64,000. Less of the amount over. Well, if you think about where does $64,000 sit, it actually sits right here. It sits right there in between 50 and 75. But, so if you think about that, we need to go, okay, so our bracket is here, so our amount over is $50,000. We're over that first bracket of $50,000. Our net income subject to the tax rate. Well, if you think about this, what's 50,000 minus, or 64,000 minus 50,000? That's going to be 14,000. So that 14,000 will sit right there, and that's ultimately what we have to calculate to finish our calculation for net income tax. So our net income subject to the marginal tax rate is going to be our 14,000. So we know that 14,000 times 25% is what we have to calculate. So for this example, we are going to have to calculate 14,000 times 0.25, which should get us right around that 3,600 mark, $3,600. So if you think about what I just did here in 1A, I just calculated my 3,600. So now that's not our only thing, because remember we have to include that beginning. So my bracket minimum tax of 1B, and I'm just going to go 1B, which equals 50,000 times 7.5, which gives, I'm sorry, not 7.5, times 1.5, so 0.15 rather, will give me $7,500. What's that saying is the tax on that first 50,000 of my 64,000 equals $7,500. The tax on the next amount that has not been tax checked, which is 14,000, because remember my total is $64,000. So 1A is going to be 14,000 times 0.25, because they give it to me, which means that's going to be 3,600. After I do my 3,600, now I need to add them together. I am going to take my 7,500 plus my 3,600 will get me $1,100 in taxes, in which we must put together for this company. Sorry, $11,000 in taxes that we must put together. So that is how you calculate. So in a sense, this company owes $11,000 in taxes, in income taxes for this. So we need to now record this transaction as an entry. So now that we have our income tax that we owe, our federal income tax being $11,000. So I'm just going to jot this over here as I'm going to work on this side of this. I'm going to just say that we owe $11,000 in federal income tax. Well, if you take a look here, we've been preparing all year long for our federal income tax. And when we've been preparing for it is we've been putting money aside. So far, our business has put aside $10,000. Well, that's really good and everything, but it wasn't enough because if you remember, we owe $11,000. So what we have to do is we have to make an adjusting entry. So our adjusting entry that we're going to do is we need to ultimately make this to $11,000, or we need to add 1,000. Right? We need to add 1,000 to our federal income tax expense. Now, knowing your debit and credit rules, what else must happen? Our federal income tax is going to be our debit. What must we add that 1,000 to? We have to also add it to our federal income tax payable, a credit of $1,000. That then, after we've done that, then you need to go back and recalculate the bottom, these two numbers, and they should equal now because we have added our federal income tax expense into that. After we've done that 1,000, then we're going to go down here and we are going to record our adjusting entry that we just did. So the date of the transaction was the 31st. My debit was my federal income tax expense. Again, just coming right from here. And we debited 1,000. We made it go up 1,000. So we're going to debit it 1,000. And my credit's going to be my federal income tax payable. Now the question comes, why do we do the payable and not cash? Because we haven't paid it yet, and that's the reason why. And that's how we record that. So now that we have that recorded into the journal, now it's time to do everybody's favorite process, and that is of posting. So in order to post this, what we're going to do is follow the same steps we've followed all year long on this. And that would be as followed. Let's take a look at the date. The date of this transaction is the 31st on the federal income tax expense. This is coming from page G20 of the General Journal. So we are going to go over here for our post reference, going to be G20. If you notice that it's a debit for $1,000, oops, put that on the wrong line. We'll just move that down to there. Okay. It's a debit of $1,000. You'll notice that we have a debit balance with a debit entry. They're the same. If they're the same, we're going to find the sum, and our new balance will be $11,000. I then am not done. I'm going to take this 6205 and I'm going to go up here and I am going to post it up there to show that I have done that. I complete the same process for the federal income tax payable. Now I put 1,000. I have a zero balance, so I now have a zero balance of $1,000 there. And then I go up and I put my 2170. And that's how you post this transaction.